You'll never be caught needing to replenish your stash again when you subscribe to Hemper's monthly smoking boxes. Hemper's hands down the best place to stock up on your smoking supplies no matter the occasion. Curated with innovative and hand-selected products to ensure you're getting the absolute highest quality accessories for your smoking experience, Hemper's monthly smoking subscription service provides $100 plus in value for only $40. There's also the convenient options to receive every month, quarterly, semi-annually, or annually. And right now, use promo code HEDGE10 to get started and receive 10% off Hemper's box or the XL box at Hemper.com. Lifted Drinks. Join the party, skip the hangover. Created by hemp and cannabis lovers, Lifted is an amazing, tasty, non-alcoholic beverage created to improve any evening in or weekend out. Lifted is 100% hemp cannabis, 100% consistent, 100% of the time. We could ship anywhere in the U.S. Just add ice or mix it with your favorite beverage. Check them out at lifteddrinks.com. That's LYFTED drinks.com. Enter in radio to get a 20% discount at checkout. You must be 21 or over to join the party and skip the hangover. We're going to take a look at a report from Headset covering 14 markets across North America, look at year-over-year sales growth, the average basket size, meaning how much are people buying, how much are they spending, what's the average sales growth. Just kind of take a look at some key metrics month over month and year over year, kind of give us a little bit of a pulse check on the legal cannabis market, all of that coming up.
It's only entertainment.
Welcome back to The Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. So on a pattern that we've seen since August of 2021 is a decrease in sales price. We covered that on 420. We said that it wasn't going to, or I said that it wasn't going to be much of a sales day, that we're going to see higher sales on the 4th of July and New Year's than we are on 420 because of the everyday discounts, which we're going to cover that on another podcast. But we have been seeing steadily declines in sales. So even in places like California, granted, they're over $3 billion with a B, $3 billion in sales. That includes 419,000 in sales for the month of July alone. So kind of blasting away other states and other areas. The only place that had an increase really was in British Columbia. I think that's because of slow rollouts. But, you know, when you compare it to Colorado, who's kind of getting a little hammered, especially when you consider like year over year sales growth, in Colorado down 17%. So there's a little bit of a decline. And I think that's because of the high prices on everything, all commodities, housing, groceries, gas, everything. So people are really having to cut back. There's been, analysis from Headset, for example, they were attributing it more towards the pandemic and people over purchasing, over consuming, and that those heavy users have since pulled back, or the quote unquote tourists that were in there consuming have pulled back, definitely on categories like edibles and whatnot. But I don't think the demand was from that small segment to begin with. We can see places like Nevada, tourist area coming down, new emerging markets like Arizona coming down, Washington and Oregon relatively flat. And I think that's what you're going to start to see in more stable, mature markets is flat in Washington at 106 million, fairly flat in Oregon at 81.5 million. As I mentioned before, British Columbia, just a little bit of a tick on this particular chart, although they are going up. I think they're fairly slow at opening, and they've been hit by a lot of the restrictions in Canada, folks not being able to come in, and then looking at Hastings Street, and it's just a giant camp spot. No one really wants to go shopping if they don't feel safe, and it looks pretty bad, just like kind of Skid Row in San Francisco or in LA. I mean, it was pretty bad. But moving on to some other areas, you can see here steadily total sales coming down regardless of where it's at. You can see that stair-stepping pattern where it's going down. And that's been happening for over a year now. This is year over year sales growth, and you could just see also it's in the negative territory. So there's negative sales growth with the exception of British Columbia and Ontario, which had 22 and 29% respectively. Some other ones getting absolutely hammered. Nevada, negative 25%. And then, Saskatchewan is up as well, but everyone else, you could just see, bam, that kind of sharp, steep, steady decline. Michigan may have leveled out to a 25% year over year sales growth, but everyone else hasn't reached that bottom. It doesn't look like, even Illinois. Let's find out how much people are spending on average per region. Starting off in California, it's below the $60 minimum for delivery, telling us still that people are walking in and buying less, drawing that price down below because they don't want to spend the $60 or $65 minimum for delivery. So they're spending $57 and change in California, 52 in Colorado, 60 in Nevada, a little bit higher because of tourism. So they're going to splurge on an expensive blunt, for example, or concentrates or something to bring that price up. Whereas in Washington and Oregon, those are in the 30s, 32 for Washington. It's so convenient. You go and get it when you want. And we still have a ton of SKUs. So 1,700 SKUs in Washington versus a place like, let's see, Massachusetts only has 321 SKUs. So not even close. Arizona's got over 1,000. Illinois got close to 1,000, but 1,750 SKUs is overwhelming. It's a lot of competition, and prices are some of the most competitive at $32 versus Arizona's still going to be $58, but BC, the whole West Coast is in the 30s, with the exception of California. But I think that's out of convenience for a lot of people who want delivery. East Coast is a fairly new emerging market. It's going to be higher still, with Maryland almost at $100, $98 and change. Michigan's at 65. They're creeping down. Ontario, different marketplace up there. It's only $41. And there's an overabundance of stores, more than Starbucks. And that's how Saskatchewan's, which is fairly small. I like Saskatchewan because it's kind of looking at some of the really rural areas of the U.S. and what the cannabis industry could do if emulating Saskatchewan. But Massachusetts, new emerging market. Illinois still $72 in Massachusetts, 81 in Illinois. Those are still fairly high by comparison to the more mature West Coast market. So the data I used to get from Headset and still do changed about 4 months ago. So last quarter, we were counting how many items that people were buying. That data has since changed. How many SKUs does a store have? So, in March, I could say that 3.1 million products were sold in Washington State. Now the data is 1,750 SKUs are available to choose from. It's like going to a restaurant that has like 40 pages in the menu and you're like, Jesus, I don't know. I have no idea what I'm so indecisive. I can't pick, but I don't know. That's just me. I mentioned that Arizona has got over 1,000. Illinois has got 900. And when you walk into Massachusetts and there's only 320 SKUs, it's not a lot. I've been to some places in Nevada, and the stores only, they've made the decision to only have a few products. They don't want to overwhelm people. So it's even less than that. So another piece of data changed. The brand concentration is now the month over month, same store sales. So looking at, instead of the number of brands maybe consolidating, we're taking a look at a more interesting metric, in my opinion, to give us an idea of month over month and what those stores are doing. And from here, you can see that they're not doing well. So regardless of where it's at, it's either negative or flat. nothing is. Ontario's got the best market at 2.7%. Illinois is down 2.5%. So is Michigan, 3.2%. So everybody's down, and there's no escaping that. We'll continue to see some consolidation, capitulation, people kind of giving up. They weren't expecting maybe this recession or depression. But what we will see is much more markets, especially one that's got too many licenses, like Oklahoma, Oregon, anything that has hundreds and hundreds of cannabis farmers. It's just too many. It just, as a commodity natural crop, it's too much, too many that need to go out of business, but aren't, because they're not paying themselves, because they think eventually it's going to work out for them and it's not going to get any better. And so with other commodities, whether there's energy or fertilizer increasing in price, or labor, they're not going to be able to keep up, especially with the millions that are coming in from out of state, multi-state operators, or new entrants, not going to be able to keep up. And so we'll see a lot more consolidation in the industry, and a race to the bottom in terms of some of the product that's out there, but definitely pricing. And a lot of people that weren't vertically integrated, meaning they don't have all of the entities in place from the seed into the sale, then they're going to have a lot more pressure on them to get out faster. Places like Washington that aren't vertically integrated is different. We just don't have a lot of out-of-state investors. So that's kind of an exception to the rule. Everyone else who doesn't have the ability to really minimize their expenses and automate, for example, on the grow, and make a lot more efficiencies in the middle, like you're seeing everyone else, Apple, everyone is laying people off. And I think the cannabis industry, and we're going to do a report on turnover, because that's always an issue. And the Great Resignation was no different for the cannabis industry, in an industry that already sees a ton of turnover. So that's going to have an impact on loyalty and repeat sales. But people are already cutting back because it's like they've never seen it before. This amount of inflation being put on the individual at every aspect hasn't happened in a long time. And even back in the day, there's kind of a meme that, we're hitting the oil embargo of the 70s, and all of these, the recession or depression of the 20s, and all of these things kind of all hitting us all at once. And in the end, it's going to impact the consumer's budget, how much money they have, how much they're going to spend. And these high prices were only going to last so long. So in the end, things are going to normalize. Cannabis is going to become a commodity, and a lot of these guys won't be around.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out, and check out these other videos that we've got.